Welcome to another episode of Millennial Investing Explained. Here's today's question. Let's shift gears and talk about, from a high level, the different investment strategies that can be implemented using the assets that we just talked about. There are many different strategies that you can use as an investor, and I plan to do a future episode where I dive really deep into these strategies. But for now, in this episode, I just wanted to briefly discuss them and point out a few of the most common strategies, as well as some of our favorites. I personally use a long-term buy and hold value strategy similar to Warren Buffett's, but I also mix in some options and momentum. I know you're a really big Buffett fan, Stig, so I'm assuming you implement a value strategy as well. Can you talk to us a bit about your current investment strategy and how new investors might be able to use a similar strategy to benefit them?
Yes, I would love to do that, Robert. And like you, I look at Warren Buffett. I'm not saying in any way I'm as smart as him. I think it's quite evident for everyone that I'm not. But Warren Buffett is really the pinnacle whenever it comes to investing. And the investment strategy that he preaches and the one that I'm trying to follow is actually very simple. I buy into individual stocks at a price that is lower than what I estimate the price to be. And then I simply wait. Keep in mind, price is one thing. Here it is again. Value is another. We really have to separate those two. So if you watch CNBC and you hear that Apple stock is trading for $170, that's not the value of the stock. Now, the journalist might say that is now the value of Apple, but it's not. That's the price of one Apple stock. Your job as an investor is to estimate the intrinsic value for that stock. In other words, you need to provide an estimate of what you think it's truly worth. Yes, the price might go up 1% one day, go down 1% the next day, but the value of the stock changes very slowly. And if you're right on both the price to value assessment, meaning that you might buy one share of Apple $170 with the true value or the intrinsic value, as it's often referred to, is say $250, you'll make a decent profit as long as you're patient.
I think you hit on a very important key point right at the end there, Stig, and that is patience. As long as you're patient. This is one of the biggest problems investors have, especially millennial investors. It seems that today most people, and millennials in particular, want instant gratification, and that can be very detrimental to an investor's returns. Now, that being said, just because Stig and I both use long-term value investing strategies as our main focus, that doesn't mean that that's the only one available to investors. There are certainly short-term strategies that investors can use. Now, I don't particularly use them or recommend them, but investors can day trade stocks, generally using technical indicators. Day trading is when an investor buys a stock with the intention of holding it for a very short period of time, usually just a day or maybe a couple of days, and then hopefully selling it for a profit. Some investors do this by studying how the chart of a stock looks and then trying to predict where that stock will go based on what the stock's chart has shown in the past. That's how many people are actually introduced to investing through these types of short-term day trading strategies from quote-unquote gurus that promise to get rich quick. Like I said, I don't personally like these strategies because I believe no one knows where the market is going.
And another way to look at this is really to look at the Forbes 400. How many investors do you find in there, like long-term buy and hold investors? Okay, quite a few. How many day traders do you find there? I don't think I've ever seen one. So I'm not saying that I don't respect or believe that you can make a few bucks. Like if you think that tomorrow at 2 p.m. this stock will do exactly this because you've seen a trading pattern. I'm not saying that it's not possible to make a little bit of money out of that. I think that it's a very difficult way to make money compared to making a sound analysis and just wait. Hold that stock or that ETF for years, for decades, and not jump in and out on an hourly or daily basis. I think not only will it be very stressful, I also think it'll be very difficult for you to make money in that way.
And it's hard to do over the long term. You might be able to do it for a short period of time and make a little bit of money, but it's very difficult to do consistently and successfully for a long period of time. And when you're learning about investment strategies like day trading from quote unquote gurus who are posting ads all over the internet, I find it very important to consider how that guru is actually making their money. Is it from trading or is it from selling their courses? The answer to that question can be very telling as to whether you should trust them with investment advice or not. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.